Hello, good afternoon. Uh, I'm sorry about the technical difficulties we had before, but we are very happy to have been able to reschedule Theodora keynote. She is the co-founders of Unconventional Ventures, and she will talk to us about how to level the playing fields with AI. Theo, all yours.
Thank you so much, Claude. And thank you. It will not be 2020 if we don't do a restart. So it's perfectly great. So thank you so much, Claude, and everyone for including us in this week's event at MTL Connect. It's been amazing. I know that my partner was also in a session in a panel this morning. And so watch for a couple more contents coming from us on Friday, as well as we talk about the future of work. How do we make it more inclusive, as well as longevity and technology. And shortly following this presentation, we'll also have a panel on AI and ethics. So psyched to be here. Wish we could meet everyone in person in Montreal, but voila, it's 2020. So without further ado, let's go straight into the presentation. Power of AI in financial services. The reason why we want to talk about it is often when we think about AI, we immediately think about Hollywood movies, and we think about killer robots, and we think about the end of whatever it is that we know it, and it's all doom and gloom. But there are a lot of good things that we can look forward to with technology, and hopefully we can bring out a little bit of that in the next 35 minutes with you all. A little bit about our company, for those of you who are not familiar with us. So Unconventional Ventures, we founded the company 2 years ago with the belief that anyone should have a chance to try and succeed, regardless of their demographics, regardless of their social circles, regardless of their gender, age, ethnicity, where you grew up, the zip code, where you go to school. We work with a lot of startup founders, and we find that opportunities are not always equally available, even though talent is equally distributed. And so with that in mind, that's what guides a lot of the work that we do when we work with startups around the world, when we partner with different event organizers such as MTL Connect. A lot of the work, we try to drive the thoughts about including different voices, different faces into things that we do, that we talk about, that we think about. So last week I was in Cyprus, and then the next 2 weeks we'll be working with Hong Kong FinTech Week, all along the same theme. We also partner with different corporates around the world working on projects. We work with incubators and accelerators, including Holt FinTech Accelerator here in Montreal. We also do a lot of writing. We contribute to Harvard Business Review, Nikkei, American Banker, and we also have our own podcast called One Vision that we would encourage you to check in and take a listen on Google Play, on iTunes, as well as on Spotify. So let's go back to the theme of what we want to talk about AI. That's not something new. I remember growing up with cartoons. I grew up in Asia. And so my first exposure to artificial intelligence, to robotics, is Doraemon. That was my favorite cartoon, is robotic cat that traveled from the future. And of course, there are the Star Wars, R2-D2, C-3POs, and then onto Transformers. But that was my perception of technology, of AI. It's there to help humankind, to help us solve our problems and help us become better versions of ourselves. Now, of course, AI was termed way before all of these cartoons and movies. In fact, it started in 1950. And we have come a very, very long way since then. And I'm sure, unless you're living under the rock, for those of you who join us here, you would have had some exposure with the technology one way or another, be it your iPhone with a Siri, or your Amazon Alexa, Google Home, or even if you're navigating around with the map technology, chances are you have seen and felt and used it before. A large part of that development has been fueled by data, and lots of it. According to IDC, They projected for 2020, there will be 47 zettabytes of data. That is a lot of zeros. And of course, it's still growing exponentially. Where do all these data come from? Well, I'll ask you this. What was the first thing that you did this morning when you woke up? Or the last thing that you did when you went to bed? If you were like me, chances are you have one of these. You get up, you check your email, probably check your schedule, see what you're doing today, post a picture or two on Instagram, go to your social feed, look at the news, any of these in here. Now, I love these infographics. A picture says 1,000 words, and in here, thousands and thousands and thousands of ones and zeros. That's what it's telling us. A lot of these jump out. For example, WhatsApp users, they share 41 million messages in 1 minute of 2020. Or what about Amazon? Over 6,000 packages shipped 1 minute. Or think about Instagram, right? Or Venmo, the amount of cash transfer that's being done via that app in every single minute, or streaming. And now I would believe that the numbers are probably even higher now as we're talking, because for the last few months, more than half of the world's population have been socially isolating from the rest of the world at one point in time. So the only way for us to reach out to our friends and family, to our colleagues, to our community, checking to see what's going on is via digital media, right? It's via social media, via the news, via emails, and FaceTime, right? All of these activities from when we get out of bed to when we go to sleep at night, it generates data, and lots of it, telling stories about our lives and how we're consuming different services, and along with it, what we expect from it. And that's been fueling the growth of technology. It's been fueling the growth of a lot of these big tech companies, our ecosystem, right? So in the West, we have the GAFAs of the world, the Google, Amazon, Facebook, Microsoft. And then in the East, we have the BAT, the Baidu, the Alibaba, and the Tencent. All of these companies are the backbone of our daily lives, if we come to think about it. And their ability to leverage tools, to leverage real-time data, that opportunity has allowed them to develop a new level of customer intimacy that had never been possible before. And all of that is fueled with artificial intelligence. That is the new battleground. Doesn't matter what industry you come from. Consumers are increasingly comparing their digital experience to what they get from these big technology platforms. So sometimes I often wonder, why would it take me a day or two to clear a check? Whereas I can go to Amazon and order a package and arrive within 2 hours. I understand that is a privilege, but it's also a privilege offered by technology with these big tech companies that somehow my bank is not able to provide. And AI allows us to recognize patterns better, anticipate future events, create rules, and make better decisions, both corporate and personal levels, and communicate with each other, right? See, at the end of the day, technology is about bringing humans together. It's bringing us closer together. And it's no wonder that there's so much interest in the ecosystem on AI startups around the world. Now, 2019, we have seen record funding, over $26 billion. I know that 2020, the numbers have gone down a little, but that's to be expected with everything that's going on around the world with the pandemic. For example, second quarter of 2020, we have seen about $7 billion of funding to AI startups. Now, that's still a large number. And so if you look at it from a general trend perspective that we've been tracking from 2014 to now, it's still going upwards, and that space is still growing. And not a day would go by that you wouldn't see some sort of news about artificial intelligence, machine learning. Doesn't matter what sector you're looking at. right? So for example, you'll see headlines about how it's taking banking jobs away. It's replacing people that are working in financial services, replacing the traders, because now we're doing things with algorithms. Or what about the race, the AI race between countries, right? Between the US and the EU and China, and who's going to take the lead and what does the future look like? In fact, there's not one single area within financial services that will be left untouched by AI. From account opening to how much do you know about your customer KYC and fraud, deposits, using different means of lending to people, how you're filing the claims for insurance, processing them, payments, to cybersecurity, capital markets, everything and everywhere that we look, there will be elements of financial services transactions that will be changed by artificial intelligence and more. According to the World Economic Forum earlier this year, they said AI is expected to turn into an essential business driver across the financial services industry in the short run. And I'll say short and long run. Now, obviously, it's not without challenges, right? Because that's what happens every time when we try to change something, both culturally as well as technologically. We need to advance and adapt. So, for example, quality of data. Just having data is not enough. What is the quality of the data? Do we have access to the data? That would be the first thing I ask. And how good is that data? Is that usable? And how do we deal with the systemic bias that's in our data? Think about a lot of the events of years past. It's by human. Algorithms are made by human. When you put humans together, inherently, you will have bias. And that's what one of the sessions later that our team will address is on AI and ethics and bias. And what about trust? Trust is important. In our panel yesterday, when we talked about financial inclusion, when we talked about using different fintech solutions to extend financial services to different people, one of the big topics we talked about is trust. Just because you throw a system in there, just because you throw a function capability in there, doesn't mean that people will trust it enough. It also doesn't mean that it's contextually relevant to the demographics you're serving, right? See, at the end of the day, again, it's not just about ones and zeros. It's about the humans. But regardless, AI as a technology is shaping and reshaping how we are offering services to our customers. And I know it's way too complex and complicated and doesn't do it justice by boiling it into just different sticky pads. But here I have some interesting use cases that I thought would be worth talking about. Churn prediction, onboarding, right? How well do you know our customer? How do you personalize the offers to customers and keep them happy? How do you use AI as a method to authenticate people, right? And to conduct transactions, to underwrite new loans, or one of the most prevalent and most active segments of AI in financial services is to deal with personal finances and wealth management, right? How do you use that to help consumers generate more wealth and attain a more secure financial future? Or more relevant for the last few months is looking at call center technology. How can you use that to improve operational efficiencies and customer experience for people calling in? See, there are lots and lots of use cases, but each one of them are at different maturity level, and I think there's a lot of potential to grow. For call center technology, for example, the ability to use tech to automate responses using keywords, recognizing different patterns, and using the technology to live switch and transfer over to an agent using chat. I just tried that a couple of weeks ago and I loved it. See, with COVID in the last few months, a lot of people have been staying at home. And there's also an enormous amount of volume calling into call centers, people checking into what's going on with my bank account or trying to make different arrangements to deal with payments, etc. So call centers around has experienced high volumes. And I love one of the use cases with US Bank, What they have been able to do in response to the pandemic is to create a bot and to recognize what are some of the most common things that customers are calling in for and automate that responses so that to cut down the wait time and to make it easier for people to get access to information. Or what about conversational AI, right? In the last few years, what we've seen a lot is, hey, what is the balance for my bank account? Or how much did I use for Starbucks last month? That is not that interesting, is it? What if we can extend it, and we have seen it, to do more for us, to onboard new customers' bank account, or to manage the requests? Now, I'll tell you a little story about myself. Back 2 years ago, I tried to open a new bank account for my business. Now, I didn't wake up one day and say, oh, today I would like to open a bank account. No. I woke up with a need. The need is I need to be able to find a new way to invoice my partner. And so naturally, I have to go open a small business account. I went to the bank that I've been using as a consumer for the last 30 years. It turns out I have to make an appointment to go into the bank branch, get a stack of paper, print it out from the branch manager. Got told I have to go back, fill it in, and make a second appointment. A week later, I happily went back to the branch and say, here you go, I'm all done. Oh no, that was just the beginning of the journey. As it turns out, he had to take that stack of paper that I filled up with pen, verified my ID, and then told me, yes, now I'm going to take that stack of paper, fax it over to someone else so they can create the account and all of the back end stuff for you. Let's meet again in a week. So this is week number 3. 3 weeks later, went back to the branch. I got my bank account. Now think about that experience that I had. I needed a new way to get money from my partner. I needed a new way to invoice someone I'm working with. It took me 3 weeks. Now, is that an enjoyable journey? I would say no. And what made it worse was that I compared that experience to everything else that I've been able to get from my daily lives, right? From earlier, like I said before, from ordering something from online to ordering like delivery takeout to getting even an Apple credit card. All of that experience was so much more seamless and so much easier than me having to go into a bank branch 3 times in 3 weeks. So you see, we have a lot of room to grow and change. And speaking of change, Alibaba, it's a big e-commerce giant in China. They have what they call the Singles Day. I always love this example. It's amazing. So Singles Day is the November 11th of that year. They'll have that one day with a ton of deal, just like the Amazon Prime, or think about it as Thanksgiving, Black Friday, and Cyber Monday. So people flock online and they make a ton of purchases. Now, that's not new, right? That's not interesting. What is amazing is that one day, they have generated over $38 billion US in sales, and out of which 1 million of those orders were done using voice technology. That's right. Consumers placing the orders using voice, 1 million of those. And on top of it, 60% of that payment on that day was done using biometrics by taking a selfie or scanning a fingerprint to pay. Imagine how much the ecosystem have changed, how far we have gone. That is amazing. And of course, with biometrics, we can also use that to board flights when, more of us were traveling, unlock phones. We can also use AI for fraud. I love this use case. Recently, I posted a question on social media and asking people, what are some of the interesting use cases of AI in financial services that get you excited? And it was interesting. It was a good split, a fair split between wealth management, which we'll talk a little bit, and fraud. The reason why fraud is really, really interesting, especially for the demographics I'm always looking at, is you can use AI machine learning to identify potential financial exploitation for older adults. Now, oftentimes when we think about fraud, we think about money laundering, we think about, fraudulent checks, and all of those are valid scenarios. But what about people that we don't often think about? What about the older adults? Because they are also the ones that tend to have the most assets within our financial institutions. And yet, oftentimes, we tend to overlook their needs. But they are also the ones that are the most targeted by fraud, by people who want to steal their money. And oftentimes, it's not strangers. A lot of times when financial exploitation happens with older adults, it's people that they know, their friends. So what if we can use technology to detect changes, potential problematic behavior, and to be able to alert them to it so they don't lose their life savings? On average, each episode of financial exploitation costs them about $100,000 US. That is a lot of money. And what about payments, right? There's a lot of talk the last year or so about buy now, pay later is a new way, quote unquote, new way of installment payment. That people are saying, oh, that could be a different source of paying for merchandise. But what if we don't even need to make that decision at all? What if we can have a system that can automatically determine for us which payment method is best to consider, automatically create credit limits, and have that platform act as an informed, real-time financial advisor for us? And underwriting, the ability to use different data to identify and extend credit to responsible customers. Now, every time I think about AI and lending, I think about Zest Money. See, I had a great conversation with Lizzie Chapman, and she implored on me on one thing that I still remember to date. Lending is easy. Responsible lending is hard. So when we're increasingly using technology, using alternative data to make credit decisioning, to think about who else we can lend the money to, we need to think about that. Are we responsible in what we're doing? Are we going to overextend them, creating debt situation for them that might not be desirable? See, that's one thing about financial inclusion that we need to think about, right? Because financial inclusion isn't just about creating a bank account for people who are otherwise not included in the financial services system. It's also to be able to do so to extend the activities, their dreams, the aspirations that they have, and to help them attain a more secure financial future. And technology can play a good part in that. And what about autonomous banking, or autopilot, as some people will call it? We're increasingly seeing more implementations of systems doing money management, like the old way of having different envelopes. You have one for rainy day, one envelope for going shopping, safe to spend, and one envelope you put aside for bills. And increasingly now we're seeing more financial institutions having that feature functionality automatically embedded with your account. So it will automatically set aside money for rainy day based on your transactions, past history. It will set aside money to help you pay bills based on the monthly obligations you've been paying, your subscription, etc. And set aside money for goals. So AI can use the technology to use the data set and to help us make decisions based on their forecast, advise us on what we need to do, and auto-allocate it for us. Wouldn't that be good? Because trust me, I love to save money. I love to make better decisions with my money, but I don't have time. So recently, Huntington Bank, a bank in the United States, have implemented such a feature called Money Scout. It's an automatic savings tool that scans through the activities, analyze the past patterns and habits and coming expenses, the obligations, and then moving money that we're not using in our account, checking account, even if a small amount or big amount, and put it into savings automatically for you. Help us save. Because it doesn't matter if you're in the United States or Europe or everywhere. One of the biggest challenge for human is that we don't save enough, right? Or DBS, it's a big bank in Singapore. They are using AI as the everyday banker. Think about bot turned banker. So those are really interesting use cases that we increasingly see in financial services institutions using technology to create more human services for their customers. So what else can we learn from the East? What about embedded finance, the super app platform that the Tencent of the world, the Alibaba of the world, who are not just a medium to help you send money from A to B, but more so as a center of a consumer everyday life, right? So Tencent, for example, their social media for the customer, as well as where they send money with WeChat, as well as more, right? Alipay is the same thing. They have a small business bank, and they also have ability for you to play with Alipay, the infamous QR code. And they have wealth management tools to help people save, right? So what can we learn more from the East to use those models and to create more opportunities for the rest of us? Or think about risk profiling assessment. That was another interesting example, right? So with Ant Group, they have a 310 digital lending, which essentially is a service they provide for micro and small business owners, where you can apply for a loan in 3-minute time, get approved in 1 second, and with zero human intervention. So take that experience, think about that, and then project to how long it typically take us to get a loan out here in the West. What are the processes we need to go through, the paperwork that we need to go through? And how can we make it more seamless, like the 310 lending model that Ant Group has, by using technology, by using AI to make the risk assessment and to make it simpler and more effective and safer. Because AI has the ability to create new value for us. It also is creating new alliances, new partnerships that enable us to deliver those services to customers. And it also has an impact on public policy. Like the panel that I just mentioned, where we'll be looking at AI and ethics. Because the minute when we start embedding all of these decisionings with the machine, the question becomes, are we doing it right? How do we make sure that we can correct it if something doesn't work? Because data is not just an input. It's not just a 1 and a 0. Behind every number, there is a human story. There's a life. And with humans, you're bound to have biases because that's human nature, right? So if we look back in the past history, our actions that have been taken, right? For example, banking while black in the United States, or the housing lending rules of mortgages, of who is allowed to have mortgages and who's not allowed, the redlining, all of those are policy decisions that are carried out by financial institutions that have consequences on a large part of the demographics. And with it come along human biases. And Casey summed it perfectly. She's the chief decision scientist from Google. And I heard this from her in a previous conference. And she said, AI represents a fundamental leap in human progress, but it's not the genie that is dangerous. It's the unskilled wisher. It's not the AI, the algorithms that we need to worry about. It's the people that create it, because this is how we are introducing our own biases into it. So what is the future of financial services, may I ask? Will financial institutions guide consumers through this new era that we're experiencing, or will they increasingly rely on fintech and big tech platforms to meet the financial needs? That's the billion-dollar question that we often ask. How do we make sure what we're doing is fair, is explainable, and is transparent? How do we go beyond improving business efficiency? Not just looking at doing something faster. How do we go beyond creating new revenue sources, not just looking at our bottom line? Because we now have an opportunity with us to use technology for good and create a more equitable society for everyone. And the events of the last few months remind me of another turning point that we had, the Great Blizzard of 1978. The Northeast experienced a great blizzard. And in New York City, the banks closed their branches for 4 days. And now if you think about closing for 4 days, well, it's fine, but think about it back then, 1978. People were still very reliant on going into a bank branch and getting cash. But because of the blizzard, the branches were closed. And so people were forced to use the ATMs, which has been around for a while. But what happened was that presented a turning point for consumers. When they got used to the convenience of the ATMs, Citi reported that with that blizzard, they saw the usage of ATM increased by 20%. And within 3 years after the blizzard, Citibank, the share of New York City's deposits doubled. And all of that is because of the ATM, is because the blizzard presented a turning point in consumer behavior. So will COVID-19 become another turning point for consumer behavior? We've been seeing reports on more customers, more people flocking to using digital banking, using fintech tools. And it goes across different demographics of people, different age groups, for example. Will that behavior stick? And does that present us with an opportunity to rethink how we're delivering services to people and give us the chance to rebuild better, to rebuild with purpose? Because everyone has a role to play. And it's not about reducing the number of clicks when you're onboarding a consumer from going down from 15 clicks to 5 clicks. It's not about looking at the number of unicorns and how many mega deals are there. Because if we were paying any attention to things that are happening around us, we have millions of people that are food insecure, close to 2 billion around the world that do not have enough food to eat. We have millions of children that have no access to internet. While you and I are talking and interacting in this wonderful digital conference, there are all those out there that do not have this privilege to learn because they're disconnected from the world when we all went digital. So we do have a purpose, and there are things worth fighting for. There are things worth doing that's more than going for clicks. So I'll leave you with this. What do you stand for? Be part of that change, and let's make banking better. Thank you.
Well, thank you, Theo. It was quite thought-provoking and quite inspiring. And we might have time for a few questions. The first one that comes to mind is you're talking about AI algorithm, and we all know that these big corporations are creating these AI for maximization of profit. And they might be using it to accelerate the decision time. But what happens when you're dealing with a digital ghost, meaning people that don't generate enough data? So when the algorithm try to apply their formula, nothing come up, and basically they are being declined of the loan or their request.
Yeah, I think it is actually a really, really real scenario, right? It's no different than in the old days or even now when we're dealing with customers that have credit thin file, right? That they might be around, but they don't have enough history, or they haven't done much for, let's say, 40, 50 years. That actually recently, yesterday in our panel, someone brought up the fact that if you're an immigrant, right, new to the UK, people will literally encourage you to pay a few bills late so that you can sort of create some sort of activity. And that is just the absolute wrong approach to it. I think there's no easy answer for that. The only thing I would urge is do not repeat the practices of past days, right? Be it analog or different ways of doing things, and put it to algorithms to use. We have to change it. This is a chance for us to change it and rethink things differently. And that's why I think having transparency to how things work and having a check and balance is so important, because this is how these issues surface, right? Just like recently, I believe a month ago, there was a big video conferencing system, we're not going to name names, that somehow when a person of darker skin tone come online with a virtual background, their head is cut off, right? And it wasn't because the algorithm say, oh, you know, if this person is black, cut the head off. No, it wasn't because of that. It was because the data that was being fed to the system when they train it, it is not diverse enough, right? So that's why the question that you ask, right? How do we avoid it? Or other situations is we need to be transparent, we need to be vigilant, but more importantly, we need to have different people that are part of that solution creation team, right? That can bring different kind of thoughts. The ones that you just asked, the question that you asked. See, someone told me, and I think it was absolutely right, he had it nailed, is people tend to solve problems that we're familiar with, right? And that explains why a lot of times in Silicon Valleys, if you look at a lot of these startups, their team are the same, and the problems it's trying to solve are the same, and the solutions look exactly the same, because that's what they're familiar with. But when you start bringing in different people with different backgrounds, from different socioeconomic backgrounds of things that they're more familiar with, that's when you bring richness into the solution and the discussion.
Well, let's hope that the future AI algorithms will try to reduce bias and try to be more inclusive with everyone. Well, Theo, thank you very much. And it was a quite interesting conference, and looking forward to see you in all the other panels that you will be animating. Thank you again, and have a great day.
Thank you so
Thank you,
much.
Theo.